Welcome back. Well, HDFC Bank will continue to remain in focus today as well. Abhishek joins us to tell us more about the stock. Abhishek?
Well, if you take a look at the ADR of HDFC Bank, it declined by more than 9% in yesterday's trade after a decline of more than 6% that you saw the day before yesterday. So in terms of, the delivery volume, which was around 62.75%, and total traded volume was about 8.5 crore shares, which is worth about 13,319 crore, leading to a market cap decline of more than 1 lakh crore. In terms of open interest, it was up 20.5% versus stock decline of more than 8%. If you take a look at the technical levels in terms of stock price, the stock is right now trading below 100 DMA, but slightly above 52-week low of 1,460 per share. We have a note coming in from Bernstein. They have an outperformance rating and a target price of 2,200 per share. Now, they have spoken to certain investors with respect to what are the key concerns that investors see. And, the impact of ICRR requirement and excess liquidity has led to a decline in net interest margin, which has actually surprised the investors on negative side. Q3 net interest margin was unchanged quarter on quarter despite the absence of ICRR, that is incremental CRR, and decline in LCR, that is liquidity coverage ratio, to 110% versus 121% in the previous quarter. Apart from that, the net interest margin movement actually surprised negatively given the weak deposit growth. So estimation was that net interest margin would improve. Investors have also pointed out to concern that their net interest margin didn't rise due to system-wide increase in cost of funds, or is it that the bank chose expensive liability which impacted the net interest margin? These are the two areas of concern that investors have seen for net interest margin in Q3 FY24. Other concern is that the continued weak deposit growth could actually limit the loan growth for HDFC Bank or eat into the net interest margin of HDFC Bank. So they see potential decline in earnings growth in FY25 and 26 and increased uncertainty on time needed for improvement in operating metrics like LDR, that is lending deposit ratio and net interest margin, etc., could actually weigh on the stock. Back to you.
Thanks a lot for that, Abhishek. Well,